Ladies and gentlemen, good day and welcome to the H2 FY26 results conference call of JD Cables Limited, hosted by Equibridge X Advisors Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. This conference may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on the date of this call. These statements are not guarantees of future performance and involve risks and uncertainties that are difficult to predict. I now hand the conference over to Ms. Dhruvi from Equibridge X Advisors. Thank you, and over to you, ma'am.
Thank you, and a very good afternoon to everyone. Welcome to the H2 FY26 earnings call of JD Cables Limited. From management team, we have with us Mr. Piyush Garodia, Managing Director, Mr. Rajesh Jhunjhunwala, Whole-Time Director, and Mr. Abhishek Gupta, Manager. The call will begin with opening remarks from the management, after which we will open the floor for Q&A. With that, I would now like to hand over the call to the management for opening remarks. Thank you, and over to you, sir.
Good afternoon, everyone, and thank you for joining JD Cables Limited's financial year 26 earnings call. A warm welcome to all our investors, analysts, and stakeholders joining us today. Thank all our shareholders and stakeholders for their continued trust and support in our journey. JD Cables Limited continues to focus on manufacturing high-quality wires, cables, and conductors, catering primarily to the power transmission and distribution sector. Over the years, we have built strong capabilities across manufacturing, product development, and project execution, enabling us to serve utilities, infrastructure projects, industrial customers, and state electricity boards across. During FY26, we continued strengthening our operational capabilities, enhancing manufacturing efficiency, and expanding our market presence across key geographies. Our focus on quality customer relationships and execution excellence enabled us to capitalize on growing opportunities arising from increasing investment in power infrastructure, electrification programs, and industrial development across the country. Today, we have established a strong presence across northern, eastern, and northeastern India and are an approved vendor for multiple state electricity boards. Our diversified product portfolio includes power cables, control cables, agent branch cables, service cables, and conductors, such as AC, triple AC, and ACSR conductors, which continue to support our long-term growth strategy. Our manufacturing operations are supported by two production facilities with a combined installed capacity of approximately 28,000 kilometers per annum, comprising 6,000 kilometers at Unit 1 and 22,000 kilometers at Unit 2. During FY26, we achieved healthy capacity utilization levels of approximately 82.4% at Unit 1 and 84.6% at Unit 2, reflecting strong demand across power transmission, distribution, infrastructure, and industrial sectors. In line with our long-term growth strategy, we acquired a new industrial facility at Kanpur, spanning approximately 1.18 lakh square feet. The facility will support future capacity, expansion, and operational efficiencies. We have also continued investing in plant and machinery while expanding our product portfolio with the addition of new product lines, including MVCC, air conductors, STS conductors, and HT cables, enabling us to address a broader spectrum of customer requirements. Coming to the financial performance in FY26, Abhishek Gupta will be on the line.
Good afternoon, everyone. So for FY26, the total income stood at 365 crores, registering a growth of 45.67% year-on-year. Our EBITDA increased to 48.11 crores, reflecting a growth of 40%, while profit after tax grew to 31.72 crores, registering a strong growth of 44% over FY25. But our half-yearly financial performance was also encouraging. Total income for half-yearly stood at 243 crores against 143 crore turnover in half year FY25, registering a strong growth of 70%. Our EBITDA increased to 28 crores, reflecting a strong growth of 52%, while our PAT stood at 19 crores, registering a strong, robust growth of 69%. Mr. Piyush sir will continue from here.
Our strong execution capabilities, expanding customer base, and growing demand across power, infrastructure, and industrial sectors continue to support healthy business momentum throughout the year. We also maintained a robust order book of approximately 515 crores as of March 31st, 2026, providing strong revenue visibility and supporting our growth outlook for the coming years. Beyond our core manufacturing operations, we have established a strategic presence in the infrastructure and EPC segment. The ongoing execution of a key national highway development project involving civil and electrical works demonstrates our capability to undertake complex infrastructure assignments and create an additional avenue for long-term growth. Going forward, we remain focused on strengthening our manufacturing capabilities, enhancing operational efficiency, expanding our product portfolio, and capitalizing on opportunities arising from India's growing investments in power transmission, electrification, and infrastructure development. Supported by a strong order book, expanding capacity, diversified product offering, and a healthy balance sheet, we believe JD Cables is well positioned to deliver sustainable growth and create long-term value for all stakeholders. Before we begin the discussion, I would like to thank our employees, customers, business partners, and shareholders for their continued trust and support. With that, I now hand over the call for further discussion and question and answers.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to please use handsets while asking a question. Ladies and gentlemen, we will now wait for a moment while the question queue assembles. Our first question comes from the line of Vishwender Singh from Prudent Equity. Please go ahead.
Hello. Hi, sir. Am I audible?
Sir, you're audible. You may proceed.
Sir, I wanted to ask about the timeline for the new capacity to commission and what sort of utilization do we expect for this year, FY27?
It's already under process, and we are expecting our electricity connection to we will get the electricity connection within this month only, and our conductor division is already in place, so we are waiting for the electricity connection. I think very soon our conductor division will start, and then our coming next, then our cable division will also get started in the next 2 months. We are expecting.
Okay, and how much of this total capacity can be utilized for this year and next year?
So for next year, I can tell that it will be utilized fully, and it will be running in full capacity, say 70-80% capacity, and at least. And for this year, by September end, I think we will be operating at a good pace, and we are expecting good revenue from this unit as well.
Got it. And on the margin front, our margin from the first half to second half have declined. So any comment on that, and what expected margins do we see going ahead?
Margin is almost as I can see, if you compare if you see from the last year and this year, it's mostly same.
No, from the first half, sir, H1. From H1, sir, abhi hamare margins from 16 to 12% they have come. So, uske behind kya reason tha?
It's because there are lots of if you see there are lots of expenses and if you will see we are supplied in bulk quantities, and so that's a marginal decline if I'm not wrong. Our EBITDA margin declined from.
Okay. So what sort of margin range do we expect going ahead, sir, for the company as a whole?
We are expecting, going forward, similar margins we are expecting.
Okay, 12 to 13%.
Yeah, same margins we are expecting, that same margin.
Got it.
Yeah.
And on the EPC side, sir, I wanted to ask how much of the total EPC order have we completed yet?
It's around, right now we have completed around 10%. That was.
And for FY27, do we expect the full execution?
Mostly, we are expecting like a good percentage of completion by 2027, FY27.
Okay. And lastly, on the debt part, do you plan to increase debt to fund the working capital and the EPC execution? And by how much do we expect to grow our debt?
Yes, sir. We make plans for debt from banks, etc. We have already participating in lots of tenders, and so for if we'll get that tenders and for executing that orders, we will definitely look for debt from banks, etc.
Okay, sir. That will help. Thank you.
Thank you, sir.
Thank you. Participants, you may press star and one if you wish to ask a question. Our next question comes from the line of Dia with Sapphire Capital. Please go ahead.
Hi, am I audible?
You are audible, ma'am. You may proceed.
So what is the current order pipeline that we have and the timeline for it?
Ma'am, we have around 500 crores order book as of now, and timeline is normally 1.5 years.
And any more tenders that we are bidding for?
Yes, ma'am, we have already participated in around 1,000 crores tenders, in fact, more than 1,000 crores tenders, comprising of both EPC and cable tenders. And the tenders outcome of the results are due.
And what is our conversion ratio in this?
And since if you will see transmission and distribution, we have participated in several transmission and distribution tenders. So we didn't have like prior experience in participating in this sort of tender. So it's quite difficult to tell the conversion ratio. But still we are expecting good favorable results in some of the tenders.
Okay, and what sort of revenue growth are we targeting in FY27?
And we are expecting 50 to 60% revenue growth in this financial year, and even in the next financial year.
50 to 60, right?
Yeah.
And on the margins?
Margins, ma'am, we are expecting a similar level of margins.
Okay, and as you said, EPC, we have completed 10 CR, right?
No, ma'am, 10%. I told 10% of the project.
Okay. And the rest we are going to finish in this year.
Yeah. We are expecting good percentage to be finished by the end of this financial year.
And what CapEx are we planning?
And CapEx, we are planning around 20 here, because 20 to 30. It depends upon the once this new unit starts. It depends upon the orders, the level of orders we will get, and it will not be a tough task to install newer machines, because we have good space in our new plant. So it depends upon the order. So basically, we are expecting around 20 CR to be minimum 20 CR to be on the CapEx side. We are already in the process of procuring land adjacent to our newer factory. We have already given some of the payments, and we will be increasing our land. we are taking further land in next to our factory.
Have we already purchased this land?
And we have made some advance payments.
Okay. Okay. And this new facility that is going to be operational, so by September end, what utilization can we achieve?
And see, actually, we will be manufacturing lots of newer products in this, like HTLS connector, AL59, MVCC, and so ST cables. So it may take some time, like to get the approval, to get the PIS license. So it will be operational, but we will try to get that license approved very shortly so that we can run at full capacity.
Okay. Okay. And what is the revenue potential from this?
The revenue potential is almost double, and as if you can see, like we can even 3x, 4x within next 2 years. It's got a lots of potential. Like we have, as I said earlier, it's our new plant has lots of space, so we can install a newer plant and nothing. Our capacity can be expanded to 3x, 4x within next 2 years, say.
Okay, so that's it from my side. Thank you.
Thank you. Thank you.
Thank you. Participants, you may press star and one to ask a question. Our next question comes from the line of Abhi Jain with Feynman Capital. Please go ahead.
Hi, good afternoon. Am I audible?
You are audible, sir. You may proceed.
যে ব্যক্তির সঙ্গে আপনি কথা বলছেন তিনি আপনার
Hello.
One moment, please, sir.
So,
Sir, you may proceed with your question.
so my question is around working capital, and obviously you are undergoing a massive growth right now, but the problem is the cash drag. Now, even this year, the inventory cycle, inventory days have gone up significantly. So I just want to understand that going forward for FY27, do you think that you can, reduce this cash drag, and do you think that, you would need equity or debt funding to proceed with the growth that you are envisaging for FY27?
Can you repeat the question, sir, if you don't mind?
मेरे को ये पूछना था आपसे कि FY27 में आपका FY27 में अगर आप FY26 देखते हैं तो ऑलमोस्ट 70 करोड़ का कैश डेफिसिट था, राइट, ऑपरेशन से, बिकॉज ग्रोथ पे सॉलिड थी आपकी, तो ऑब्वियसली इसको फंड करने के लिए आपको कैश लगाना पड़ा बिजनेस में, बट आपकी इन्वेंट्री भी बढ़ी है इस साल और आपके पेएबल्स कम हुए, तो वो एक जो लीवर होता है पेएबल्स को स्ट्रेच करने का, वो आपके पास इस साल नहीं था. अब FY27 और FY28 में क्या 50% की ग्रोथ टारगेट कर रहे हैं, बट क्या आप वो जो ग्रोथ टारगेट कर रहे हैं, क्या उसमें आप अपनी कैश पोजीशन इंप्रूव कर सकते हैं, या आपको लगता है कि ये जो कैश ड्रैग है, जो इस साल 70 करोड़ का कैश डेफिसिट था, वो इसी तरीके से आगे चलता रहेगा? मतलब कुछ आपका प्लान है, या फिर आपको लगता है कि आपको डेट या इक्विटी वैल्यूज करनी पड़ेगी अपनी 27-28 की ग्रोथ सस्टेन करने के लिए भी?
Right now, we are, if we will need any working capital, we are looking for like debt funding from banks only, and we have already applied to bank, and they are ready to be, and as of now also we have sufficient cash and bank balance in our bank, and banks are willing to give further debt funding as and when required. So we don't think we will have any problem in executing the newer orders and for this financial year. And
in FY27, you don't see much improvement in your cash from operation, because or do you think this working capital cycle will improve for you in FY27? Today you almost need, I think, about 110-120 odd days of working capital. 3-4 महीने का आपको working capital चाहिए होता है, तो वो do you see that cycle becoming more sustainable going ahead? क्योंकि growth तो आपकी ऐसी चलती रहेगी, so just want to understand that.
I think the working capital cycle has gone up due to execution of EPC project, because आप देखिएगा सर लास्ट 2-3 मंथ्स में हम लोग EPC प्रोजेक्ट्स में काफी वो लाइक फंड 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 वहाँ पर लगा हुआ, तो उसका भी रेवेन्यूज अभी सर इन कैश होगा सर, वो बिल्स छूटेगा सकता है, तो वहाँ पर ईपीसी में भी वहाँ पर फंड लगा हुआ, तो उसमें क्या है एक बार में ही बड़ा बड़ा बिल छूटता है, तो वहाँ पर फंड कुछ वहाँ पर ब्लॉक है।
सर कुछ आइडिया आप दे सकते हैं हमारे FY27 में इन टर्म्स ऑफ मतलब कितना आपकी पीक डेट या पीक आपको कितना एक्सटर्नल फंडिंग चाहिए हो सकती है? मुझे फिगर आउट समथिंग कि अभी जैसे आई थिंक ऑलमोस्ट 55 और करोड़ की डेट है वो करते हैं, तो आपको कितना एडिशनल फंडिंग चाहिए हो सकती है इन FY27 वर्किंग कैपिटल?
It depends. See, right now we are sitting on comfortable like cash position, cash and bank balance, and like we don't have any such issue with executing like current orders and like the orders in hand and the current running project. But going forward, as I said, we have like participated in several more than 1,000 crores orders. So if we'll get like good favorable orders in our name, then we will definitely be looking for the fund. And for that also, like we are already in touch with banks and they are ready to give the like funds. So we don't think right now, as of now, I don't think we will face any such problem.
Yes, sir. Thank you and all the best.
Thank you, sir. Thank you.
Thank you. To ask a question, ladies and gentlemen, you may press star and one. Our next question is from the line of Achut Reddy with Rockstar Equity Research. Please go ahead.
Hello, sir. Sir, I want to understand more about your EPC business. In the current year, how much revenue you got from cables and how much revenue you got from EPC, and how much is the breakup for FY27?
So you want to say how much revenue we booked last year in 26?
Yeah, currently in FY26, how much revenue you got from EPC and how much you will be getting in FY27?
So in 26, we have booked around 30 crore, and for 26, 27, we are expecting minimum 200 crore to be booked from the EPC on the minimum side, and it will go higher. I am taking conservative approach.
So this is pure EPC business, right, sir? Like, tender-based pure EPC business, right?
So if the EPC business is already going on, if you'll see like during the last quarter, we started to the EPC segment, and like it's already running and going on, and we have participated in several others like EPC tenders. So we are expecting the results very soon for that.
Sir, the main issue, I want to ask you that because operating cash flows are already minus 74 crores in FY26. Now you are entering EPC business. As we already know, in EPC business, trade receivables are higher. Now again, if you are doing more EPC business in FY27, don't you think the cash flows will take a hit more, sir, in FY27? Because EPC business definitely will have negative cash flow.
Coming on to your first part, like yes, as you said, like our cash flow was negative. I truly understand from your point, but if you see that the growth factor, taking into account the growth factor, if any company is growing around like say 50-60%, you can understand the like cash means data inventory days data and inventory will definitely go up. So it will definitely affect the like cash flow. So we believe we are in a growing phase, and like obviously in growth phase, you like there will be a cash flow. Some of cash flow will be negative. So.
Okay, sir. Thank you so much.
Thank you.
Thank you. Participants, you may press star and one to ask a question. Our next question comes from the line of Tejas Shirodkar with Vyom Capital. Please go ahead.
Yeah. Hi, am I audible?
You are audible, sir. You may proceed.
Yes. Thank you for this opportunity. I just wanted to understand when the new capacities are gonna come up, what kind of margin profile are we seeing in the new product? What incremental margins can we achieve in that?
Yes, as I said earlier, like, our conductor facility has already been installed, and we are waiting for the power very soon, and it's expected that we will receive the power within this month. And uh, and coming to your incremental, yes, we incremental, like, profit in the like newer products. We are expecting good margins from like our newer products. Definitely better than our existing products. So once we'll start like executing those, then only we can like tell you the exact margins. But still, we are expecting good margins from that. Definitely greater margins than our products.
Can you just answer if the margins are gonna be in double digit or not?
Sorry?
I just wanted to understand if the margins are gonna be in double digit or not in your product.
Yeah, we are expecting.
Oh, understood. Okay, that was it from my. Thank you.
Yeah, thanks.
Thank you. Ladies and gentlemen, you may press star and one to ask a question. Our next question comes from the line of Himanshu Agarwal, an individual investor. Please go ahead.
Hi, sir. Am I audible?
Sir, you are audible. You may proceed.
Yes. Yes. Sir, as you mentioned that your EPC revenue will be approx 200 crore this year, so and against 30 crore in FY26. So the 50% growth will come from EPC only. So like other cable and conductor business will be flat, or will there be growth from that segment also?
As you rightly said, like, we are growing from, say, 30 CR to 200 CR in that segment. And as I said, like in cables and conductors also, we are expecting good increment, say 30 to 40%. We are expecting increment, but overall, if you'll see, we are expecting like minimum 50 to 60% growth in our revenue.
Okay, sir. And sir, what will be the margins in EPC?
We are operating at around, say, around 8%, if around 8% margin we are operating at in EPC. And once the project is like in the completion stage, we can tell the exact margin then, but we are expecting like 8% margin around in EPC also.
So, sir, the combined overall margin will be in double digits, right, for FY27?
But, sorry, combined?
Combined margin will be in double digits for FY27.
Double digits, you must to say PAT or what?
Like, no, margins, operating margins, EBITDA.
EBITDA, yeah, it will be. It should be.
Okay, sir. Thank you.
Thank you. To ask a question, ladies and gentlemen, you may press star and one. Our next question comes from the line of Surya Prakash, an individual investor. Please go ahead.
Sir, thank you for the opportunity and congratulations on the great set of numbers, sir. Sir, in our presentation, we have given like our order book is 500 crore plus. So my question is, do we have a revenue from non-order book in this upcoming financial year? And also you can give me the breakup of non-order book revenue in the financial year 25-26.
Sorry, sir, you mean to say in this 515 crores order book?
Sir, this is our order book, sir. That is as of 31st March 2026, sir. So we have something like non-order book, like a regular customer, a repetitive customer, apart from this order book, which we are seeing in the financial year 26-27?
Yes, definitely. There are lots of orders, like say customer places order. Say today they are placing the order and they want the materials within let's say next week. There are lots of running orders like that. And as I said earlier, like we have already participated in several tenders also.
Sir, just one more question, sir. Like in financial year 25-26, like can you give me a breakup, like how much revenue has come from order book and non-order, sir? Can you please give me a breakup of that, sir?
We have not like sorted that out. Still, if you need, we have to. I'll tell my team to segregate.
Sure, sir. Sure, sir. And just one more question, sir. Like, how much order book are we forecasting for, are we targeting at the end of financial year 31st March 2027, sir?
So definitely we will be targeting much more, but still we are expecting 700, 800 CR at least our order book to remain. We are targeting over 700, but still on the conservative side, I am telling that 700 CR, 800 CR we are expecting.
Okay. So currently our order book is 515, you are saying, and end of 31st March 2027, we'll be having 500 plus order book. That's what you mean?
Yes, yes, definitely we will be targeting much more.
Okay, okay, sir. Sir, thank you very much, sir, for giving me this opportunity, sir.
Thank you, sir.
Thank you. Participants, you may press star and 1 to ask a question. Our next question comes from the line of Shivam from MB Investments. Please go ahead.
Hello, sir. Can you please break down the current order book by segment?
Sorry, sir, I didn't get your question.
I was just asking, can you please break down the current order book by segment? Segment-wise means cable, conductor, and EPC.
It's mixed. Still, I can tell you in this it's around 300 CR is from around EPC and 200 CR is from cables and conductors.
Okay, sir. Thank you.
Thank you.
Do that.
Our next question comes from the line of Meet Mehta, an individual investor. Please go ahead.
Yeah, very good afternoon. सर सबसे पहले तो ये जो अपना कैपेसिटी है 28,000 किलोमीटर से फेज वन में कितना हो जाएगा बाय सितंबर 2026?
So we will be doubling our capacity as I said earlier, like double capacity, and we still have a good scope to expand whenever required.
Okay, so we are targeting around 4x in the next 2 years, right?
Yes, we are targeting say 3x, 4x, depending upon the order book we have, we will be expanding.
Okay. Sir, एक और क्वेश्चन ये था कि since last year we were operating at around 80% capacity, and for FY27 now we are targeting around 50 to 60% of growth. So sir, ये growth आएगी कहाँ से? Because we were already running at optimal capacity last year.
If you see, we have established a new unit in Concall. That's around 118,000 square feet, and we are preparing further land beside that. So we will be having a good revenue from there.
Okay. Okay. Also, other expenses are up from 4 crores to 24 crores. So sir, इसका कुछ breakup दे सकते हैं कि where we had expensed this 6x in our other expenses?
So actually, as we started our new segment EPC business, and we have incurred lots of expenditure in that, the bills are pending for that invoice.
Okay. Okay. And sir, एक last question on West Bengal. So after government change, demand कैसा है sir West Bengal से?
A good question, sir. As you know, the government has been changed here, and we are expecting good business and good investments in business. Already, there are we have heard lots of investments and lots of infrastructure development will be happening in West Bengal, and lots of projects are in pipeline as we are in regular contact with the officers. And West Bengal will definitely a good opportunity for us.
So, sir, the orders aane lage hain. We have any inquiries from that particular region?
Sorry, sir. Actually, sir, as you know, the cabinet expansion is going on. For next week, the portfolio will be allocated, and the power minister will be expected to join, say, next week. From then onwards, we can expect, but still the government has sanctioned lots of projects for West Bengal.
Okay. Thank you so much, sir, and all the very best for coming.
Thank you, sir. Thank you.
Thank you. Participants, you may press star and 1 to join the question queue. Our next question is from the line of Rohan Soni with Soni Investors. Please go ahead.
Hello.
Hello.
You are audible, sir.
Hi, sir. So very good afternoon. Actually, I have a question that the company has branched out from product manufacturing into infrastructure. So security and electrical work for 6 national highway projects, which is under phase 6 of NHDP, which is between Bihar-Jharkhand border. So what promoted this major strategic shift outside of your core cable manufacturing expertise?
So as you know, we have a dedicated EPC team which is being led by Mr. Rajesh Jindal, and he has a vast experience in this EPC segment, and he is guiding us in that business. And EPC is a forward, as I said earlier also, EPC is a forward integration for us, and it will be quite beneficial in the longer term, because all the electrical works requires electrification work requires cables and conductors. So as you know, we are manufacturing cables and conductors, and as I said, that we have already participated in several other EPC tenders like transmission for transmission and distribution sector. So going forward, it will be a huge advantage for us, considering that we ourselves is manufacturing cables and conductors.
Okay, sir. So is this infrastructure segment going to be a recurring part of your corporate identity for going forward?
Sorry, sir. Can you repeat?
I was asking that, is this infrastructure segment going to be a recurring part of your corporate identity for going forward, or this will be the tactical engineering procurement contract?
Sorry, I didn't understand your question.
Actually, sir, I was asking about that this infrastructure segment is going to be recurring for your corporate identity for going forward, or it will be the tactical part. This is my simple question I was asking.
Yes, it will be recurring in nature. We will be participating in several other projects.
Okay, sir. I think I got my answer, and thank you for this opportunity.
Thank you, sir. Thank you.
Thank you.
Thank you. Participants, you may press star and 1 to ask a question. Our next question is from the line of Sonia Gupta, an individual investor. Please go ahead.
Hello, sir. Good evening. Good afternoon. My question is, you are introducing premium and high voltage products line including MVCC, AL59, STLS and HD cables. So what type of client testing or qualification process are required before state electricity boards begin placing bulk commercial orders for these new lines?
Yes, ma'am. Actually, we already have our in-house team dedicated. Our engineers are well equipped, and they are well trained in this product. They have worked for several other big companies, and they have a good knowledge, first of all, and secondly, As you know, we are already supplying to various state electricity boards and EPC contractors. So more or less the process are same, and just we have to enlist ourselves as a vendor in newer product. After submitting, say, different state electricity boards have different rules, and say some electricity boards will conduct the factory inspection, and after approval provide us a vendor registration certificate. And some electricity boards, after taking the reports from the external lab, they just give the approval. So it depends upon the electricity board. We will get the approvals.
Okay, sir. And how do the EBITDA margins of this value-added technology cables compare to the baseline cables and wire segment, which brought in roughly 76% of your revenue in FY26?
Yes, ma'am. So, as I said, ma'am, we are expecting good margins, definitely, greater margins than our existing products. And it once we start selling that, I'll be in better position to answer the questions.
Okay, sir. Thank you.
Yes, ma'am. Thank you.
Thank you. Ladies and gentlemen, you may press star and one to ask a question. Our next question is from the line of Meet Mehta, an individual investor. Please go ahead. Meet Mehta, your line has been unmuted. You may proceed with your question.
Yeah, sure. Thanks for the follow-up. So, sir, I wanted to understand that for EPC, we are targeting 8% kind of EBITDA margin, right?
Yes, sir.
So, sir, we are currently...
Sorry to interrupt, sir. Sorry to interrupt. Yeah, your line is not very clear, sir.
Is it clear now?
This is much better, sir. Please go ahead.
So, I wanted to understand that currently we are doing around 12 to 13% kind of EBITDA margin. And in EPC, we will be doing around 8%. So, we will have in...
It's the PAT margin, sir.
8% is the PAT margin?
Yeah, around 8%.
Okay. So, on an average, 12 to 13% is what we are targeting for EPC as well.
Yes, sir. More or less, you can tell.
Oh, okay. Okay. Thank you so much.
Okay. Thanks.
Thank you. Participants who wish to ask questions may please press star and one. To ask a question, ladies and gentlemen, you may press star and one at this time. As we have no further questions, I would now like to hand the conference over to Ms. Dhruvi for closing comments. Over to you, ma'am.
On behalf of JD Cables Limited and Equibridge Advisors, I would like to thank everyone for taking the time to join today's conference call. Should you have any further queries, please feel free to connect with us at info@equibridge.com. Thank you, everyone.
Thank you. On behalf of Equibridge Advisors Private Limited, that concludes this conference. Thank you all for joining us. You may now disconnect your lines.